Full-time Director Commercial, Mr. L. Kishore Babu, Chief Financial Officer, and Mr. Venkatesha Perumallu, General Manager Finance and Accounts. During the day, our board has approved unaudited financial results for the quarter and half year ended 30th September 2024, and we have released the same to the stock exchanges as well as updated the same in our website. Please note that this conference call is being recorded and a transcript of the same will be made available on the website of the company. Also, please note that the audio of the conference call is the copyright material of Divis Laboratories Limited and cannot be copied, rebroadcasted, or attributed in press or media without the specific and written consent. Let me draw your attention to the fact that on this call, our discussion will include certain forward-looking statements, which are predictions, projections, or other estimates about future events. These estimates reflect management's current expectations of future performance of the company. Please note that these estimates involve several risks and uncertainties that could cause our actual results to differ materially from what is expressed or implied. Divis Labs or its officials does not undertake any obligation to publicly update any forward-looking statement, whether as a result of future events or otherwise. Now, I hand over the conference to Dr. Kiran Divi for opening remarks. Over to you, sir.
Good afternoon, everyone, and welcome to Divis Laboratories earnings call for the second quarter of the financial year 2025. It's a pleasure to speak with you today and to share an overview of our recent performance and progress we are making across various areas of businesses. We are pleased to report that Divis achieved significant revenue growth in the second quarter, reflecting the success of our efforts to harness expanding market opportunities. This growth comes amidst a significant shift in custom synthesis landscape, where we see an increasing demand from both existing and new customers. Our strategy to diversify across portfolios is yielding favorable results, and the impact of our previous investments and expansions are becoming clear. We are not only expanding our market presence, but also reinforcing our reputation as a trusted partner in complex and high-value green chemistry. In the generic market, we are indeed facing some pricing pressure and industry-wide challenge, but we are optimistic that this will stabilize in the near future. Despite of this, our emerging generic products continue to perform well, creating positive momentum that supports our overall generic business. Importantly, our future pipeline is robust, with a range of generic products advancing towards customer qualifications and regulatory approvals in the United States and Europe. We anticipate these products to start contributing to our revenues from 2026 onwards. Our contrast media segment is another area of noticeable progress, where we are currently engaging with most of our key customers, and our projects are moving through various stages from qualifications to commercial supplies. This strong engagement underlines our growing demand for our capabilities in contrast media and providing us with significant growth potential. Within our custom synthesis division, we are seeing increased interest and engagement from our customers. The number of RFPs and on-site visits from our existing customers and potential customers has been steadily rising, with a focus on securing long-term partnerships that emphasize supply chain resilience and backward integration. Our approach in custom synthesis continues to be collaborative and forward-thinking, ensuring we are well positioned to support the evolving needs of our customers. In response to the wave of new peptide drugs, particularly those targeting GLP-1, we are making investments to expand our technical capabilities. We have established infrastructures dedicated to solid-phase peptide synthesis and currently operating multiple 500-liter reactors. With the demand continuing to rise, we are now expanding our solid-phase peptide synthesis facilities further. On the technology front, Divis has been successfully utilizing continuous flow chemistry technology. We have successfully applied this technology in our labs and at a pilot scale. Divis is set to expand its use into commercial scale production in the next 1 to 2 years. This step not only talks about our enhancing our efficiency, but also reflects our commitment to innovation and advanced technology. We are also excited to report that our greenfield expansion at Unit 3 is progressing well. This 200-acre project represents a significant step forward in our growth trajectory. With phase-wise production activity expected to begin in December 2024, this facility will provide us with added capacity needed to support our growth and further extend our production capabilities. In Q2, we have successfully concluded a US FDA inspection at our Unit 2 facility in Visakhapatnam. This positive outcome reaffirms our commitment to the highest quality and regulatory compliance standards, underscoring our reliability as a global supplier. Beyond our operations, Divis Laboratories remains deeply committed to corporate social responsibility. We believe in contributing to the well-being and sustainable growth of the communities around us, particularly in Telangana and Andhra Pradesh, where our manufacturing units are based. This quarter, our community initiatives were centered around expanding access to primary health care in rural areas. We deployed mobile health screening vehicles to bring essential services directly to the rural populations, ensuring daily healthcare needs are met. We also supported the establishment of community healthcare centers, conducted in-school health checkup camps, and extended assistance to several government hospitals in Visakhapatnam. These initiatives are aligned with our commitment to fostering healthier and more resilient communities around us. Now, Ms. Nilma Prasad Divi will present you with the financial highlights of the second quarter of the financial year 2024-25. Thank you.
Good afternoon, ladies and gentlemen. Thank you for joining us today as we gather to discuss Divis Laboratories' operational and financial performance for the second quarter and the first half of FY24-25. I am pleased to share that Divis has achieved sustainable double-digit growth in the first half of this fiscal year. This is a testament to the resilience and dedication of our teams, as this growth has been realized despite significant logistical challenges. Continued disruptions in Red Sea have impacted global shipping lanes, with increased attack on commercial vessels prompting the rerouting of shipments via South Africa. This change has extended our transit times from around 45 days to approximately 70 days and raised associated logistics costs. In anticipation of these issues, we have been in close communication with our customers to plan shipments well in advance, ensuring that we meet their requirements with minimal disruption. Our commitment to efficient supply chain management has been paramount in maintaining a steady flow of products to our customers even amidst these disruptions. On procurement front, we have observed stability in raw material prices over the past 6 months. While the stability has been favorable, we are approaching it with caution as the market remains sensitive to developments in the Middle East and fluctuations in crude oil prices. A sudden shift in these factors could impact raw material costs, and our teams are closely monitoring the situation. To mitigate the risks related to inventory management, we have adopted a proactive approach by advancing shipments by 3 to 4 weeks maintaining extended safety stock levels, and diversifying our supply base wherever feasible. These measures are designed to safeguard against potential supply chain disruptions and ensure that we can continue to meet our customer demand without compromising on quality or timelines. Our commitment to operational excellence and our strategic adaptability have been key in navigating the challenges of this first half of the year. I will now present an overview of the financial performance for the second quarter and first half of the financial year 2024-25. We have achieved a consolidated total income of rupees 2,444 crores for the current quarter as against the income of rupees 1,995 crores for the corresponding quarter of previous year and of rupees 2,197 crores of the immediate previous quarter of the current financial year. Profit before tax for the current quarter is rupees 722 crores as against rupees 469 crores for the corresponding quarter of previous year. Profit after tax for the current quarter is rupees 510 crores as against 348 crores. For the first half year, we have earned a consolidated total income of rupees 4,640 crores as against the income of rupees 3,854 crores for the corresponding half year of previous year. Material consumption remains at about 41% of the sales revenue for the first half of the current financial year. Profit before tax for the current half year is rupees 1,326 crores as against rupees 961 crores for the corresponding half year of the previous year. Profit after tax for the current half year is rupees 940 crores as against 704 crores for the corresponding half year of previous year. Exports for the half year is about 87% of the total sales revenue. Exports to Europe and United States combined are about 71% of the total sales revenue. Product mix for generics to custom synthesis for the half year is 49% and 51% respectively. We have a forex gain of rupees 28 crores for the current half year as against a gain of rupees 14 crores in the corresponding half year of previous year. Our constant currency growth for the half year has been at 21%. Our nutraceutical business amounted to rupees 406 crores for this half year. We have capitalized assets of 64 crores during the current quarter and rupees 124 crores during the half year. We have a capital work in progress of rupees 1,316 crores as of September 30th, 2024, of which Kakinada project accounts for rupees 1,006 crores. Total amount spent on Kakinada project till 30th September 2024 is rupees 1,181 crores. As of 30th September 2024, we have cash on book of rupees 3,602 crores, receivables of rupees 2,181 crores, and inventories of rupees 3,145 crores. Thank you.
Thank you, madam. With this, we would request the moderator to open the lines for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants, we request to limit your questions to 2 per participant. We'll wait for a moment while the question queue assembles. Our first question is from line of Damayanti Kerai from HSBC. Please go ahead.
Hi, good afternoon, and thank you for the opportunity. Dr. Kiran, you mentioned there are multiple 500-liter reactors right now in operation for your peptide project, etc. So, can you elaborate a bit more? Are you close to supplies, or it's still some time before you will start supplying to your customers? And also, if you can mention whether you are just working on the solid state peptide or you are also working on the liquid state peptides also?
So, as I explained before in the previous call, we have been in the peptide business for the last 14 years, where we have developed amino acids, protected amino acids, and we have been supplying these to several innovators for them to produce their GLP-1s. Now we have got into solid phase peptide synthesis and also liquid phase peptide synthesis, both to produce fragments. These are for tetramers, octamers, or decamers. And we are right now producing, and they're undergoing qualifications. Then they have to go into filing. So it will take some time before they totally commercialize. In terms of peptides, right now we are supplying the individual protected amino acids while the qualifications are going on.
So approximately, say in another 12 to 15 months, do you think supply can start for these products also?
We are hoping it would be sooner, because the sooner we can get approvals, we can sell. But all this depends on the regulatory bodies, both in US, Europe, Japan, different countries. So it completely depends on when we would get regulatory approvals.
Sure. And my second question in the generic business. You mentioned the future generic opportunities will start from 26 onwards. So can you provide some color, like how many new products you can launch under that bucket? And in terms of performance of the existing business, are you seeing a pricing challenge across the board, or it's particular to certain products only?
To answer on the steady generic business we have, like naproxen, gabapentin, carbidopa, levodopa, we are seeing pricing pressure across the board. It's not related to one segment or one therapy. We are seeing an overall pricing pressure, and though our volume-wise we have not lost any volume. We have seen a volume-based growth on these products, but however, due to pricing pressure, the generic side do not show what it has to be showing. Coming to your second question, the future generics, these are mostly products which are coming off patent from 2026 onwards, and they're in various stages of qualifications with our customers both in US and Europe. Right from some of them have filed their ANDAs, and they're waiting for their approval from various regulatory agencies. Once they get their approval, we will start supplying them quantities.
Sure. Thank you. Thank you for your response.
Thank you. Our next question is from line of Surya Narayan Patra from Phillip Capital India Private Limited. Please go ahead.
Yeah, thank you for this opportunity, sir, and congratulations for the great set of numbers. Sir, first question is about the GMP preparations and our preparedness about it. So you have already indicated a couple of times about your manufacturing capability in that, and the fragments what you have been dealing with earlier, and now the technical grade thing what you were talking about. So with this, is it possible to share you that, okay, with this, are you ready for the peptide block with an end-to-end capability, or it will still be kind of a fragments, and hence focus would be around that?
See, right now we are going by what the customer has requested us to do. Right now, our customers have shown interest in procuring fragments for us. So if our customer wants end-to-end, we do have the capability to provide end-to-end, the final API. But since this is a complete custom synthesis project, we will only abide by what the customer requires and wishes to procure from us.
Okay. So also, there are, see, this involves a kind of a complex, difficult chain of things in the API manufacturing or even the fragment manufacturing. So could you share what could be the kind of value potential of a API, or let's say the services that you are providing from the total API opportunity?
Can you please elaborate your question a bit more?
Yeah, if the API opportunity is X, then our current capability, what we are offering, that would be capturing what, around 60%, 70% of the total API opportunity in the peptide block that I'm trying to understand.
In the peptide segment, we are very optimistic that, we will be a major player in the long term. Right now, we have just entered into the fragment manufacturing. And, as time goes and as the custom business on the fragment side keeps increasing, we will get a lot of opportunities. As of now, we have good opportunities and a decent pipeline in it.
Sure, sir. Just last one question about the sense about the RFQs that you have indicated, because there is a spike that we are witnessing for everybody, that is those who are present in the CDMO space. But while this is giving a kind of a great visibility and opportunity, but simultaneously, what could be since that is the trend for everybody, so what is the likelihood of those RFQs getting converted into business, and what timeline it generally takes for converting a RFQ into a business? So some sense on that would be helpful, sir.
See, generally, we get RFQs from several customers. Okay, they can either be in phase 1, they can be in phase 2, they can be in phase 3, or ready to launch. It depends on what stage we are getting any RFQ at, and also based on regulatory approvals. It can be a new chemical entity completely, or a new therapeutic category, or they're going for a particular type of dosage. Now, all these, they have to go through regulatory approvals across all continents, and then, once the approval process comes in, then the commercialization takes place. We have been in the business for the last 30 years on this, and we have been dealing with RFQs. For us, it's not a trend. We have been in it for a long time, so we know how when the customer can see whether it is looking promising or is not looking promising, or whether this molecule will go on fast track, or is it something that will go on a slow phase because they're seeing some issues and they have to go back on the bench. So there are a lot of factors to be involved before we can just put a number and say, okay, in 3 years we'll see something. It is hard to say on RFQs. It depends completely on at what stage the molecule is at the innovator's end, and how fast he's planning to take this molecule, and if the success rate is good.
Sure, sir. Just one more about this 650 crore or 660 to 700 crore project. Could you update, sir, what is the status of that project? And just one clarification about whether the project is about a existing product that we would be supplying, let's say, at the early stage or something like that, and hence it is a dedicated project, or if you can give some color on that.
Can you just repeat your question again, please?
The 650 to 700 crore project, dedicated one, what we are working on it, and it should be a kind of FY27 opportunity. So the nature of the project, whether it is that we have been associated with the customer for some early component, and now it is getting converted into a kind of dedicated project, or what is the nature of this?
The information we already shared is what we could actually share till even now, because we are bound by confidentiality not to share more information regarding that particular venture.
Sure, ma'am. Yeah. Okay. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants, we request to limit your questions to 2 per participants. For any follow-up questions, you may rejoin the queue. Our next question is from line of Neha Manpuria from Bank of America. Please go ahead.
Yeah, thanks for taking my question. Nilima, just to confirm, you mentioned that the generic business is 49% of the revenue, right?
Yes.
Okay. In the generic business, other than the large APIs that we've been supplying, one of the strategies that we've talked about is increasing market share in some of the smaller APIs. Given the pricing pressure, have we still been able to see success in sort of growing share in the smaller APIs to get it, to make it larger in size, or has that process been slower because of the pricing environment?
I would say not just the larger molecules, but also the smaller molecules all put together. I would say that this half year for the generic business, we have seen a good volume-based growth. And it is 49% for the similar reason that in spite of having pricing pressures, we were able to sustain the generic business to that particular percentage.
Okay. So we are still seeing market share gains in the smaller APIs as well?
Yes.
Okay. And when you say pricing should normalize in the near future, would this be in the next 6 months, 1 year? What, according to you, would be a good time frame where we see pricing stabilizing for generics?
It is very hard to answer that particular question, but that is the hope that in the next 6 months to a year, we should see at least some stability with respect to the pricing pressures.
Got it. And my second question is on the contrast media. I think you mentioned that, Kiran sir mentioned that they're moving from qualification to commercial supplies. These are for the newer iodine-based and the gadolinium-based products. If you could give some color on, for which products are these, not the names, but, because I remember you talked about some gadolinium-based products also that we are working with innovators. And when can we see commercial supplies for these?
So on the contrast media and the iodine-based products, a few of the molecules we are in qualification stages, and few of them we have already commercialized with our customers, and where we have even long-term contracts with them. And as time goes, the volumes will increase even with them. So that answers iodine-based product. Coming to gadolinium compounds, we are still in qualification stages with our customers, and we hope in the next 1 to 2 years we will be commercializing on them.
And these are for a lot of gadolinium compounds, or a few of them?
As of now, because we have CDAs with several customers, I can just say that we are working quite a bit with a lot of customers on several compounds. I would leave it there. Thank you.
All right. Got it so much, sir. Thank you so much.
Thank you. Our next question is from line of Abdul Qadir Puranwala from ICICI Securities. Please go ahead.
Yeah. Hi. Thank you for the opportunity. So my first question is with regards to your GLP products. So just wanted to understand, are you trying to target a basket full of products, or these are quite specific, specific products what you are doing for your customers currently?
So as of now, GLP compounds, we are only manufacturing specific to what customers require. Every compound every molecule is different. Okay, some might be a 40-chain amino acid, where the amino acids are in a particular in a particular line. So what we are doing is we are manufacturing fragments for them based on whichever fragments they decide to source from us. A fragment can be an octamer, decamer, or whichever one they prefer to buy from us. We are not looking at the generic side, so we are not producing different octamers or different decamers or APIs and keeping it ready. We are strictly looking at as a CS business at this point.
Understood. And so, if you could help us, the quantification, what would be the kind of investments you would have done so far? Would that be possible for you to quantify?
At this point, it would be difficult to quantify because our investments are still ongoing with the increase in demand we are investing. But we are expanding our capacity in this product, so it would be difficult for me to quantify it.
Got it. And one final on the generics business. So I understand about the pricing pressure, but in terms of the volumes, could you please highlight in the sense, which are the products where there is a volume growth? And lastly, if you could quantify the volume growth for this particular quarter, would be helpful. Thank you.
I would say most of our generic products, we did have a good growth, and most of our key products, which we have been having quite a substantial market share, where we are the leading market share, we did have a very good growth, which is a volume-based growth, which is almost like a double-digit growth that I would say volume-based. But beyond that, I don't think I can be more specific about product-wise.
Okay, and how about the volume growth for the quarter?
That's what I just mentioned. It's the similar situation across the quarter as well.
All right. Thank you.
Thank you. Our next question is from line of Vivek Agarwal from Citigroup. Please go ahead.
Yeah, hi. Thank you. So, Kiran, sir, you have alluded that you are working on both solid phase peptide synthesis and liquid phase peptide synthesis. So, just want to understand that are you working for only one innovator with these two technologies, or you are working with the different innovators? Thank you.
With regards to peptides and fragments, we are working with several customers. And each one has their own requirements in terms of fragments, in terms of the chain, whether they want octamers, decamers, or purification. Whatever the customer requires, we are producing. But in simple words, we are working with several customers.
And you are working on the projects which are already commercialized, right? If I understand correctly.
We are working with customers who have projects already commercialized. We are working with customers who are in phase 3, phase 2. So we have a pipeline which is working right now.
Okay, thank you. And just the second question, you highlighted that you are operating multiple 500-liter reactors. So is it possible for you to quantify what is the current capacity that you have for solid phase peptide synthesis? And over the next couple of years, how much capacity you plan to add? Although you are not quantifying the investments, etc., but you can quantify in terms of capacity of solid phase peptide synthesis. That would be super helpful. Thank you.
Yeah, in terms of capacity, because we have confidentiality agreements where we have procured reactors based on product specific for a customer, I'm not at the liberty to talk about capacities.
Okay, understood. And
I can just talk about my general plant. I have a few 500-liter reactors, which I'm using it for qualifications. But product specific, whichever I'm working for customers, I cannot discuss. I'm sorry.
Yeah, no problem at all. And is it fair to assume that you are not working, given that you are working with the innovators in the GLP-1, you will not work for the generics, or you are still interested in the generic opportunity as well that may open into 2026?
As of now, our focus is on custom synthesis in peptide business, because all the GLP-1s are right now still under patent, and we are focusing more in that segment.
Thank you. Just one more question, if I can squeeze in. This is related to contrast media, right? In the previous call, you talked about that you are seeing a strong demand and expanding the capacities for one or two of your products, right? So is it possible again here that how much the volume can increase as far as the contrast media is concerned over the next 2 to 3 years? Thank you.
So in contrast media, we have several customers, like who are the big players. It's nothing secret, and we are undergoing some of them we are undergoing qualification. Some of them we have commercialized, and while commercializing, it is a long-term contract with year-on-year increase in volume. So it's hard to tell. It's hard to say that I would say about year-on-year we would have a 20 to 30% increase in volume would be a fair statement.
Thanks, Kiran. I have more questions, General Secretary.
Thank you. Our next question is from line of Vino from Elara Capital. Please go ahead.
Hi, good afternoon. Just two quick questions from my side. One, if I look at the consolidated other expenses, I see it is flat or maybe slightly down YOY. What helped us here?
Can you please repeat the question again? It wasn't clear.
Yeah, I was looking at the other expenses in the consolidated P&L. It is flat YOY or slightly down. What has helped us there?
What you have seen is mainly because of we implemented a lot of green chemistry and we have improvised a lot on the efficiency front, and also the backward integration that we went into, and so I think it's a culmination of all the factors that have taken into consideration that you are seeing slightly lower other expenses.
Okay, so it's going to be like this for the next near future?
Yes, I would say approximately the similar lines.
Okay. And what would be the total capex all put together this year?
I would say, including Kakinada and everything put together, another 1,000 crores is what we are assuming.
Understood. That takes it to around 1,600 crores.
Yes.
Okay. And and for next year after, I mean, I'm not asking for an exact guidance or something. Rough. Would capex be in similar lines or significantly lower than that? Sorry, I didn't hear if you said something.
I would say that, the capex is an ongoing thing, and as and when our CS projects are finalized and, expansion plans going ahead, the capex would keep on adding to it, and we would be bringing it to the notice as and when we feel that there is going to be substantial capex that's being invested in the organization.
Understood. But my question is coming from the perspective that, usually your capex till last year was around 700 crores or so every year. This year it has shot up. Next year, would it normalize based on your visibility as of now?
This year it has shot up mainly because of the greenfield project that we have installed at Kakinada. And as you know, there's a huge difference between a greenfield expansion and a brownfield expansion. A brownfield would have other services and, services such as warehouses or your boiler facilities, everything united at one place, whereas greenfield, everything has to be set up from start. So definitely the expansion of the capex expansion would definitely be larger when it is a greenfield. But yes, the idea from the next year is to be, because it's going to be brownfield expansion, it's going to be slightly lower than what it has been this year. Unless there is a huge opportunity that we would be seeing, it would require, again, a massive investment.
Understood. Thank you very much.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants, please limit your questions to 2 per participants. For any follow-up questions, you may rejoin the queue. Our next question is from line of Shyam Srinivasan from Goldman Sachs. Please go ahead.
Yeah, good afternoon. Just the first question is on Unit 3. I think in the opening remarks, you mentioned about the December 2024. I couldn't get it. So what happens in December 2024? Is it where the unit gets ready for inspections or it's ready for commercialization? If you could elaborate. And what could be the subsequent steps that we can track from a milestone perspective on Unit 3?
So the Unit 3, we are planning to start production from December 2024, and it would be a phase-wise manner wherein we would start initially a certain blocks, and as and when they are picking up and other blocks are coming to completion, they would also start getting to the production line. But the starting would happen in the December of 2024.
Yeah, Nilima, just maybe I'm wrong, but I remember we were doing some intermediates, some backward integration in Unit 3 already, right? Like maybe 6 or 9 months back. I know, which didn't require inspection. So that will stop, is it? Or sorry,
We haven't started any production in Unit 3 as of now. I mean, I don't remember mentioning that in any of the calls because it is a green field and the construction was still going on. Kakinada is going to be a combination of multiple things, and certain regulatory requirement and non-regulatory requirement products would be maybe planned over there. But as of now, there is no production happening over there, if that's what your question is.
Understood. And phase 1, when do you expect like a reasonable amount of utilization for this particular Unit 3 for phase 1?
So Unit 3 will start in December in a phase-wise manner. We think about in the next 6 to 7 months we will use complete phase 1. Initially, since we have to search for regulatory approvals, which will take time. We will do some backward integration over there and free up capacity at our regulatory units where we can produce additional products. And then in the meantime, we will see as and when when the products will get approved for regulatory inspections for Unit 3.
Understood. Thank you. Second question quickly on just numbers. QOQ, we have seen like a 10% revenue increase, quarter 2 versus quarter 1, but our gross margins have kind of declined. Anything like material costs, I think, Nilima, you called out at 41% versus 40% last quarter 1. So anything that has changed? Is it the generic pricing pressure that is leading to this? Any qualitative color, please? Thank you.
I would say generic pricing pressure would play a role in that, but that's not the complete scenario. We would normally, as an organization, say not to look at quarter on quarter, but to look at complete year, because there could be lumpiness happening in one particular quarter, whereas the other quarter would have a downside, another quarter would have an upside based on the shipments that in the customer requirements when the shipment should take place. So ideally speaking, we would say look at the whole year rather than looking on quarter.
And versus fiscal 24, you think things have changed on just the material cost angle? Are we getting better, worse? Sorry.
The material cost is actually have stabilized. I mean, if you see my previous year's investor calls, there would be information that the material cost has been rising. Right now, what we see is slight downward trend and stabilizing trend. So we are hoping this year it would be a stable material cost.
Thank you. Our next question is from line of Tushar Manudhane from Motilal Oswal Financial Services. Please go ahead.
Yeah, thanks for the opportunity. Sir, just on these peptides again, so have we commercialized the liquid phase part of peptides?
We have been there for a long time on the liquid phase peptide synthesis. What we have introduced in the last 1 year and we have been working on is solid phase peptide synthesis. And we are working only on custom synthesis projects, so it's based on whatever the customer requires. If he prefers us to make in liquid phase, we will make it in liquid phase. If he wants us to go by the solid phase peptide synthesizers, we will produce in that model.
Understood, sir. And sir, with respect to this Unit 3, this is for like custom synthesis, generics, peptides, if you want to call out in terms of what kind of products we will manufacture?
I didn't understand your question. I'm sorry.
At Unit 3, the one which is going to start the production, if you would call out like segment-wise, this Unit 3 will have more of the generics or the custom synthesis or these peptide products?
It will be a mix of everything. like I explained in previously, initially we will be producing certain backward integrated products to free up capacity in our existing plants so that regulatory products can jump in, while we will be qualifying regulatory products here too. So it is a product mix like we have Unit 1 and Unit 2.
Understood. And lastly, maybe one just clarification, this contrast media product segments, so this is under, we put it under generics or custom synthesis?
It depends on the molecule. We have certain molecules which are under custom synthesis and certain molecules which will come under generics. It depends on whom we are selling to. It also depends on whose process. Is it the innovator's process or is it our own process?
Got you. So if I have to understand in terms of the growth which we have seen in the...
Mr. Tushar, I request you to rejoin the question queue for any follow-up questions. Our next question is from line of Kunal Dhamesha from Macquarie. Please go ahead.
Thank you for the opportunity, sir. One on the GLP-1 for the project that we are doing for the already commercialized product, would you say the projects that we are getting are more of a supply chain de-risking or would it be more like incremental supply that the innovators are seeking? Because some of these GLP-1 molecules which used to be on shortage list have been removed from FDA shortage list, and given that we'll be qualifying maybe a year later, what's your take on this?
So, like I explained, right, it depends on what the customer's strategy is, whether he's de-risking the model, whether he wants to have increased capacity because of the demand in the market. Because we are working with several GLP-1s and also with several products which are in phase 2 and phase 3. So we do not know the customer strategy in clarity. Of course, as a volume, we would like to take the maximum volume and the maximum benefit, being a strong player in CS. So as of now, we are seeing good opportunities and good demand.
Sure, sir. And a related question, for the Unit 3, since it's starting in December, would it have a lot of fixed operational costs to start with, and as and when we kind of ramp up, it gets basically leveraged? How should we think about that? For the first full year, would it be like a break-even in first full year at EBITDA level, or?
Can you please repeat the question again?
So Unit 3 will be operationalized in December, right? So it will start with some fixed operational costs, right, which will be utilized over a period of time as the revenue ramps up. So what is your timeline to EBITDA break-even for this unit for the phase 1 commercialization?
It will slowly scale up. Like I explained to you, right now we will be producing certain backward integrated products while we're undergoing qualifications for certain products, and we have to go through regulatory approvals for commercial supplies. So it will take time before we can stabilize phase 1 of Kakinada.
Sure, sir. Thank you and all the best.
Thank you. Our next question is from line of Anubhav Agarwal from UBS. Please go ahead.
Yeah, hi. Thank you. One question, just want to understand on the generic side, you made a comment that on the price erosion. Trying to understand what's causing this price erosion, because my sense is that most of the molecules you're supplying have been off patent for a very long time. You have a very large market share. So is it high inventory at the customer level? Basically, I'm doubting that there will be new approvals which is causing the price erosion. Can you elaborate on the generic segment here?
If you hear from my previous calls, okay, there is a lot of inflation globally, where there's a huge pressure either to drop the prices, to make the medicines more affordable, and is passed on to our customers from the government agencies, which is coming to us. So it's not that there are new approvals. Of course, some customers may want to venture in, they will qualify us. So the volumes are growing. So on a volume base, we have increased our sales volume, but on a pricing pressure, the pressure seems to still continue, and we are just hoping it will normalize soon.
Okay, that's helpful. Second clarity, I think Nilima mentioned about that advancing shipment by 3 to 4 weeks to take care of the logistic issues. Just trying to understand this more. Since when you would have done this? Is this quarter or for last 2-3 quarters you've been doing it? That's one question here. Second is, what does it mean? The customer is holding a month inventory higher here?
It is from, you can say, this quarter. We've been proactively planning, and we are advancing the shipments of our customers as well as our suppliers, not just our customers. Wherein the material, we are holding it at our end. The customer shipments are taking much more longer because of the Red Sea crisis and because it needs to go around Africa. And because of that, we are looking at something like a 70-day shipping period. So definitely we need to advance it by a few weeks.
Would it have led to you guys getting benefit of this in terms of extra sales in this quarter, or would this still be in transit and not booked as revenues this quarter?
No, this is not that we have advanced the shipments. The shipments have been planned according to customer requirements and have been sent. It is not sending material in advance and stocking at the customer. The customer is also using it just in time.
Okay, sure. Thank you.
Thank you. Our next question is from line of Lakshmi Narayanan from Tunga Investments. Please go ahead.
Yeah, thank you. Two questions. Among your top 5 products, what is the mix of custom synthesis and generic mix? Because you give around 40-45% is from your top 5 products as per the annual report. What is the mix of custom synthesis and generic there?
That I would say I wouldn't talk about my top 5 products, generics and custom synthesis, because there's a lot of confidentiality as well sitting there. But I would say in general, my complete portfolio, we would have 49 to 51.
Got it. And second, in terms of the GLP-1 products, do we intend to supply to generic firms as well? And if so, what is the opportunity you see in the next 3 to 5 years? Supplying not to the innovator, but to the generic firms.
Right now, we are concentrating on custom synthesis projects on GLP-1s. There are huge opportunities for us lined up. And also, a lot of molecules are in phase 3, and then we are looking at various other new opportunities. We are not looking at generic custom synthesis projects, generic peptide APIs at this point.
Just one last question. In the generics, can you just quantify the revenues coming from the products we are supplying only in the last 3 years? I'm removing the dextromethorphan and things like that. What is the mix of revenues there?
It's not something that we have calculated and kept ready for the Concall, but I would say it is quite substantial. If I have to say the top 5.
No, I'm just in the generics. I'm saying in the products that have been launched in the generics in the last 3 to 5 years. You're saying it's a substantial portion of our generic sales.
Sorry, to answer this question, generics, we always look at when we do our numbers, we look at generics as one portfolio. We have never broken it down to future generics recently launched. So it would be very difficult for me or us to substantiate it. All what Nilima is trying to say is that we have gained decent to better market shares in those molecules which we have launched in the last 2 to 3 years, and we are growing in them with the qualifications and going forward.
Thank you so much, sir. I'll come back and queue.
Thank you. Our next question is from line of Dikshant Mulchandani from Divi Wealth. Please go ahead.
Hi, congratulations on the great numbers. The first question is really on, if we were to track you and find the right metrics to judge you by, what are the things that we are looking in the future or that we should really be focusing on? This is regarding the.
Can you please repeat the question?
So to track you, what are the right metrics that you would like us to track you as you mentioned, to track you from an H1 perspective to H2 perspective? As we are doing more launches, what are the key things that we should be looking forward?
So, if I understand your question correctly, we have, like I explained in my previous calls, we have the 6 growth engines in place, right from our existing business generic products, which we are, maintaining them quite stable and then increasing it in growth in terms of volume. We also have our sartan business, which is growing steadily. Our future generics, which are ready to be launched from 2026, and we are undergoing various stage of qualifications with our customers, and we are getting up from launch from 2026. Some are going to be launched in 27, 28, all the way to 29. Apart from that, we are working on the next set of molecules for them to come off patent. Yes, please.
Yes, so regarding these 26 launches that we are having in 2026, what we have alluded in the previous phone calls to, some products are going off patent and we'll be able to do on generics. Can you share some particular drugs that we can think or look at right now?
Just 1 second, please.
Okay.
Can you just repeat your question once again?
In the previous phone calls, you had mentioned, and even in this one, that in 2026 we will be launching more drugs, and these drugs will also be drugs which were previously patented and are coming off of patents, and we are going to go on generics as well. So could you just give us some key drugs that we are focusing on right now so that it would be easier for us to track it?
Typically I would not like to disclose these drugs. The only one I can talk about is what I spoke last time, is ticagrelor, which is coming off in 2026. But we have several other molecules that are coming out in 27, 28, and 29. That's all I would answer right now.
Got it, sir. Just one last follow-up is on the Ozempic drug that we have been working on, or can we really talk a little bit more on this, the GLP-1?
I'm extremely sorry. Due to confidentiality, I cannot talk about a drug or a product because you are mentioning a particular name, and I'm not at the liberty to answer that question.
No problem, sir. Thank you so much.
Thank you. Ladies and gentlemen, in the interest of time, that was our last question for the day. I would now like to hand the conference over to Mr. M. Satish Chaudhary for closing comments.
Thank you all for joining us today for the earnings call of Divis Laboratories Limited. In case you need any further clarification, please reach out to our investor relations.